All right, ladies and gentlemen, we are coming live from our Joburg office. Good morning and welcome back to the opening bell with myself, Tshepo and Ashley. And this is brought to you by TD Markets and TD Markets Academy every Mondays to Fridays at 9, streaming live on YouTube. I trust everyone is doing well this morning. All right, so let's get right into it. Today is one of the important days in the calendar. All right, there is a high impact news that's taking place tonight, which is the FOMC meeting, all right, or the FOMC statement as stated on the calendar. All right, so tonight, 8 p.m. South African time, the US policymakers are going to meet to announce interest rates. So you've got the FOMC interest rates announcement or the US interest rates announcement. All right, so this session is going to be centered around the interest rates and what we could expect from there, right? So we're going to have a look at what is expected from the statement and what we know up to this point and looking forward. All right. So let's take it from the beginning. All right. So the FOMC obviously is expected to keep rates unchanged at 3.5 to 3.75% range. All right. So at the moment, interest rates in the US is sitting at 3.75. So the FOMC is expected to keep rates unchanged. Why? Because of inflation, because of the uncertainty around the Middle East. So inflation has risen to around 3.3%, partly driven by higher energy prices, right, linked to the Iran conflict. And also, uncertainty around the Middle East situation is a major factor that was cited by the Fed in the last meeting, right? So when the Fed chair announced interest rates, 30 minutes after that, there was a press conference. He spoke, right, about the dual mandate, and also he spoke about how the Middle East uncertainty in the Middle East situation is a major factor to the Fed's holding rates, right? But at least this is what we knew from even last year, that the Fed is going to hold rates, all right? So this is what we know so far, all right? So now, what Powell might signal today and what traders will watch out for is the tone on inflation risks versus labor market softness. Any comments on a smooth handover to Wash, and hints on whether Powell or whether he will stay on the board as a governor after stepping down as chair. We're going to talk about that shortly, right? So just to summarize what I've just said, right? FOMC, right? The Fed is expected to keep rates unchanged at 3.7%, but they're looking at the range between 3.5 to 3.75%, all right? And there's a 100% probability that that's going to happen. So this is because of inflation, right? Uncertainty in the Middle East as well, and also the labor market also, all right? There are some solid economic activity, all right? There's been that we've seen at least in the first quarter, all right? So with this one, guys, this one is going to be a different FOMC statement, right? Why? Because the markets are going to be looking beyond what we see on the calendar. The markets will be looking beyond the announcement, right? Remember, the current Fed chair, his term is coming to an end on the 15th of May, right? Jerome Powell's term is coming to an end on the 15th of May. And now there's already a new, a person that has been elected to assume the position by the name Kevin Wash, who 2 weeks ago testified in front of the Congress, right? The Senate Banking Committee, and he was grilled with questions upon questions, right? So it's a Senate, it's a committee of it's basically a Senate, right? So the major thing when in that session, the major thing was the Fed's independence. The Trump administration has been putting pressure on the Fed to reduce interest rates, but they haven't done that, right? So that's why the US president elected Kevin Wash to assume the position, because he's expecting Kevin Wash to cut rates. He said he wants the US to have the lowest rates ever in the world, all right? So now the conversation will then shift from Jerome Powell to Kevin Wash. Jerome Powell, the markets are going to be looking, like I said, the markets will be looking beyond the interest rates announcement. They'll be paying close attention on Jerome Powell's tone, right? On inflation, but not only inflation, not only labor market, but the leadership handover to Kevin Wash. The leadership handover to Kevin Wash. And if Jerome Powell is going to stay on the board after his term has ended, all right? Now, switching to Kevin Wash, what do we know about Kevin Wash? He's been elected by the US president, expecting for lower rates. So in that session in the Senate committee, right, the big thing there was the Fed's independence. The Fed is supposed to be independent. It's not supposed to be dependent of the White House. It's supposed to be independent. That's how things work, all right? But you know, Trump being Trump. So so that was the major thing, right? And obviously Kevin Wash stated that the Fed will remain independent. There will not be any political pressure, and he will make sure of that, right? So now, looking at Kevin Wash, right? He's pro crypto. That is the first thing. And that might favor digital assets. We might start seeing digital assets reacting the way we have been anticipating them to, right? But that's a conversation for another day, right? So the markets will be paying close attention to that. So from today, leading to the 15th of May, the markets will be keeping an eye on anything that has to do with the FOMC and the change of leadership, and if there's going to be a restructuring within the FOMC or not, right? And obviously, the policies, the tools, the philosophy of Kevin Wash, if it's going to be the same as the committee or slightly different, if it's going to come with, new targets or different views, but we'll see, right? So that is Kevin Wash. So Jerome Powell, Kevin Wash, all right? Now, how could the market react, right? Interest rates at the moment sitting at 3.75%. We now know, right? The market's already priced in that the rates will remain the same. That we know. So what reactions could we anticipate or could we expect, right? Well, the big thing here is this, guys. Since the market already priced in no rate cut or no rate hike, right? The market has already priced in a pause. There could be muted reaction. The reaction could be muted, right? Meaning we might not get aggressive movements, right? There could be limited moves, but overall muted because the market's already priced in, right? But it would have been different if the market's already priced in a rate cut or pause, which is what they'll be anticipating. It could be different because we could be anticipating strong movements, all right? So expected reaction is muted. The only volatility we could see is his response to the journalists, right? So after the interest rates has been announced at 8 p.m. South African time, 30 minutes after that at 8:30, there is a press conference that's going to take place. And during this press conference, the Fed chair is going to be reading the transcript, is going to be talking about the dual mandate, why, and all of that, right? But after that, the journalists are going to be asking questions, right? So this is something that we watch as traders. Not only do we look at the announcement of the interest rates, but we also watch the press conference and just listen in to how he responds to the questions. And this is what most traders are going to be listening to. So the volatility we might see is going to be as a result of his responses to the questions that are going to be asked, because one of the questions will be Kevin Wash. I guarantee you, one of the questions will be Kevin Wash, and how he's going to be handing over leadership to Kevin Wash, and if he's going to stay on the board, and also the DOJ, Department of Justice investigation into the Fed, right? I think you guys might know about that. So that's basically what we are looking at for today, right? It's going to be a different is going to be a different interest rates announcement, because this could be the last interest rates announcement from Jerome Powell. The next one, we could see Kevin Wash. We could see Kevin Wash, right? So just to go over the expected reaction quickly, right? The markets are going to remain muted, right? Stock markets, your dollar, commodities are going to remain muted. Why? Because the market's already priced in and no change, right? So as a result, the market is always muted in that situation, all right? So yeah, so that's basically interest rates, guys, right? That is the topic for this session. So keep an eye on interest rates. I don't think there's going to be any heavy movements on that, but just keep a close eye there, and we'll come back with updates and see what we could expect, how we could then approach the markets after the interest rates. But 3.7%. Inflation rose to 3.3%. All right. So that's something to look for. I think if inflation went down, because it went from 2.4% to 3.3%. And this is as a result of the Middle East conflict, right? But if inflation went down from 2.4% to 2.2%, it would be very close to the 2% target the Fed has. Now, with that, we could then be looking at a different situation with the Fed, possibly cutting interest rates, or maybe pausing, but the markets could have priced in a cut as well, right? But 2026, a cut has already been penciled in, but later in the year, right? I think in September, we're expecting rate cuts in September. So this is what the markets are looking at today. And they will be keeping an eye on the charts. But yeah, so this is the day that things could shift a little bit. All right. So that is the interest rates, guys. Have a look at the charts. We'll have a look at the charts tomorrow and see how the markets have moved or are likely going to move, right? But right now, the dollar, it is how it is. Gold has been pushing down. The stock market is railing towards the upside. So the analysis that you've done yesterday, in the past week, still remains the same. All right. So let's see what's going to happen after the interest rates, and we will provide more updates. So that's it this morning, guys. That's it from us. Have a good one. Enjoy, and we'll catch you guys back tomorrow. Cheers, everyone.